All right, hello everyone. This is Tim Davis coming to you guys with my weekly market review. Today is Friday. The date is now February the 24th, 2023. I want to start off this week by showing you a tool that I like to track that I've been tracking ever since we hit this extreme high of about 97%. And for those who've been following me for years, I've said anytime you look at this tool, this is the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. You can see up here. So it is the SPXA 200R. You can find this if you use Thinkorswim. Again, it's the percentage of S&P 500 companies trading above their 200-day moving average. And since I've been watching this, I told folks that if we get up to a high of almost 100% of stocks trading above their 200-day moving average, then normally we're going to start to see the participation in the market start to dwindle. So this is what tracks the percentage of stocks that are still hovering above their 200-day moving average. And I use the moving average, the 50-day moving average to also track this movement. Now, as we get to these highs and we start to pull back, you can look at past history and determine, where we could see price action. Where we could see these percentages start to pivot. Well, one thing I noticed on this month actually is that if you see this zone here, this zone is representing an area of resistance, and you look over to the left and you'll see that there was some indecision for several months back towards the end of 2021 into the beginning of 2022, where the percentages dropped below this level of resistance, and for a few months kind of like pivoted here. We were up 1 month, down 1 month, up 1 month, down 1 month, and the next thing you know, the percentages continue to dwindle. Got all the way down almost to 0%, and then then the percentages found a way to rally. But where to? A rubber band effect right back up to the supply demand zone, right back up to this area of resistance. And we're starting to stall out there. Now, this is a monthly chart we're looking at. So this is a monthly chart we're looking at. So what I'm noticing is that all this basically shows us is that the percentages of stocks trading above their 200-day moving average is starting to lose its steam. Hence, this will eventually reciprocate to the overall market, which means we'll probably start to see over the next several months, overall market start to go in the same direction as the percentage of stocks trading above their 200-day moving average. So I wanted to point this tool out before I dug into the S&P 500, the Dow Jones, NASDAQ, and the Russell. So you guys can get a general idea of what we could expect to see over the markets within the overall markets over the next couple months or so. So let me get rid of this. Now I'm going to jump right back to a daily chart of the S&P E-minis, futures E-minis. We're going to start with that first today. And what I did here is I highlighted pretty much a supply demand zone, which means this shaded area is an area where you've seen a lot of, at one point you've seen buyers, at one point you've seen sellers over the past, I would say, year and some change. And what I noticed within that zone is that that's a very, very strong zone, especially around December of 2022. So last year, you've seen a lot of action once price action hit this level of resistance up here and came back down to the zone. You see there was a lot of sideways action about a month or so until we got out of December, and then price action started to move higher, only to bump its head up into a level of resistance. Bump its head into a level of resistance. And then what happened after we got up to the level of resistance? Same thing we've seen down here. Same thing we've seen down here. A lot of indecision until the price action decided that it wanted to go higher. So what did we see once we got up to this level? Well, around in the beginning of February this year, we've seen price action get up to that level of resistance. Same type of scenario. We bounced around a little bit until price decided, okay, it's time to go lower. So that is where we're at now. The last time when we had that action going on, we went higher. Now we're going lower. And more than likely, this zone here is going to act as a area of area of support. It's going to be a supply and demand zone. So more than likely, we'll probably get to this area, and then the market's going to want to make a decision. Does buyer step in here and push price action higher, or does seller step in here and push price action lower? My ultimate thesis is I think that the seller will end up pushing prices lower out of this range eventually. Show you why I have the thought process when we look at the longer term charts. So that's where we're at now. Looking at this daily chart again, there was we had a pretty rough week in the markets this week. Price action drifted lower, but if we look closely at what the oscillators below are showing us, is that we had a rough week in the market this week. Price action ended the week lower, as I specified that if we close below 4,000 on S&P, then generally we're probably going to end up seeing lower prices start to really accelerate. Now, with that said, nothing goes down in a straight line. So I do believe that at the beginning of next week, we could see a little bounce as we had so much selling pressure on this week. Now, if you look at the full stochastic oscillators, we are in the oversold territory on the daily charts. Williams percentage also showing oversold territory, and the CCI showing oversold territory. So while I do believe we can possibly see a slight bounce at the beginning of the week, one thing I want to point out is that now there is a role reversal as far as the 50-day moving average goes. What I mean by that, look at the 50-day moving average. So this is my green line. Last time when price action dropped below this 50-day moving average, we see what happened before in the past. And that's normally what happens. The 50-day moving average, folks, acts as a price magnet. Price does not like to be so far away from the 50-day moving average, so it finds a way to gravitate back to it. We drop below it here, and look what happened. Price action pretty much consolidated for a bit, and look what it did. For that whole time it was consolidating, continued to bump its head up into that 50-day moving average. Got real close there. Continued to bump its head into that 50-day moving average until it made a decision to go higher. Once price action was higher, then this 50-day moving average becomes an area of support, as we see here. Almost hit it there, and then we continue to go higher. But what happens? Price action is now very, very far away, was very, very far away from that 50-day moving average. So eventually what happens? Price starts to consolidate again, which is what we had up here. And then starts to draw right back towards that 50-day moving average. Now, this time, we're approaching that 50-day moving average on the way down. And that's a 50-day exponential moving average is what I use. And then once we get below that level, look what's happening. Now the 50-day is acting as an area of resistance again. So what do I expect to see? Price action will probably find a way to trickle higher just a bit, but it's going to be doubly challenged. So we have this 50-day moving average here, which is going to act as an area of resistance. And I'm also going to pay close attention to the volume as we go into next week. If we see price action start to go up with very little volume, then more than likely we're going to see price action run its head into the 50-day moving average as the 50-day moving average starts to do one of these numbers. As price action starts to rally, more than likely the 50-day moving average, as it's starting to bend, will start to bend lower, and if price action doesn't get a strong push well above this 50-day moving average, then what will happen is the 50-day is going to start to turn into an area of resistance. So what more than likely could we see? We could see a rally up to that 50-day moving average, right up to the area of resistance, and we can see a move like so. So this 50-day, I'm expecting it to start to act as a strong level of resistance. So any strong moves down and we see a rally, we're probably going to bump into this 50-day and continue to go lower. One of the reasons why I think we're the price action is probably we'll start to see lower prices over the next couple of weeks, over the next couple of months, is I'm going to show you what the weekly chart looks like. The weekly chart is showing some strong sell signals, and I'll show you that here in a minute. So that's what I expect to see as we go into next week. We're probably going to see a rally since we had so much selling pressure, and all the oscillators and daily chart are showing oversold on the daily chart. So we're probably going to see a move up. Maybe not a huge move. I don't think we're going all the way back up here around at 4,200 level. I think anywhere around 4,000 or 4,022 is where we're probably going to see some resistance. Now, if we look at the Dow Jones futures, going to see the same type of price action on the daily chart, definitely in oversold territory, and definitely trading below this 50-day moving average. And as you can see, the 50-day is already getting in place to act as a area of resistance. So what I expect to see is the price action will more than likely start to rally. But in the rally, what I'm expecting to see is that the 50-day will continue to act as a strong area of resistance, more than likely, as it starts to curve down. What we'll probably see price action do is run up into that 50-day, strong rally, and may confuse the bulls, and all of a sudden hit that 50-day and come right back down. So we have to see if that's how things pan out. But I think that is a strong possibility that we can start to see price action really react to that 50-day moving average, starting to act as a level of resistance. Won't bode well for the markets overall. So we could get a slight rally and then a failure at the 50-day. Got to pay close attention to that this week and see if that's what happens. So that's the daily chart on the Dow Jones. Again, daily chart shows oversold, so we could see a brief rally as we start next week. Look at the NASDAQ futures. They're trading above its 50-day moving average on a daily, right back down to it with this strong red candle here, with oscillators showing oversold in the full stochastics, win percentage, and the CCI. Again, we can see some movement, slight ricochet back to the upside. And here is a level of resistance that I marked a while ago. We can see price action move back up towards that level and then start to pull right back down. I think eventually this price action too will eventually, maybe next week, drop below its 50-day moving average at the slight rally. That's the NASDAQ futures on the daily. Now let's take a look at the Russell on the daily chart. Same scenario, strong movement to the downside on this week, with signs of a possible bounce right at the moving average. So we could see prices again, the bulls step in and try to push price action higher. Now I'm only going to give it slightly. I don't think we're going to come up here and take out these highs that we've recently seen. I think we're probably going to get a short-term bounce and see the oscillators probably turn back up. And then all of a sudden we may, by the end of the week next week, I'm looking for price action to continue to trickle lower. Now let's see if that's how things pan out. And let's take a look at a daily chart of the VIX. Then I'm going to go right back around and look at the weekly charts of all, and I'm going to show you why I think that any bounces or any rallies that we see could be short-lived. Here's the VIX. And the VIX looks a little different from the other markets. While the 50-day moving average on the other seem like it's about to start turning down, I think the 50-day moving average on the VIX is about to do the opposite. So what I'm expecting to see is for the VIX 50-day moving average to start to curl up. So while we had a slight pullback here, move up here, we could see another slight pullback on the VIX if the market starts to rally beginning of the week. But I think it's going to run right into another level of support right at that 50-day and then shoot up. And I think this next shoot up could be pretty substantial if that's what happens, and we can start to see the 50-day moving average start to curl upward. Now, let's look at a weekly chart on all of these, and I'm going to show you why I believe that we can start to see price action really start to accelerate to the downside on overall markets longer term. Here's a weekly chart of VIX. There's a strong, the VIX on the weekly chart has received a strong bounce from the supply zone that I pointed out a little while ago. I said we would hit this zone and we would start to bounce, and that's what's happening. Look at the oscillators after being in oversold territories for so long on the full stochastics. We've been in this oversold territory for so long, and all of a sudden we are starting to move higher, and oscillators are just starting to move higher. So I do believe that eventually on this weekly chart we are going to bust right through this 50-day moving average and really start to accelerate to the upside. Wins percentage also, so oscillators starting to point upward, and so is the CCI. On the weekly chart, so the weekly chart could show that the next several weeks we could start to see the VIX really bust through this 50-day moving average and continue to go higher. And if we take a look at, go backwards and look at the Russell 2000 on the weekly. And what I pointed out, I think once I pointed out this on last week or at the midweek, is that the weekly charts are starting to show weakness. You can see it here in the TTM squeeze. You can see it here in price action as the weekly chart starting to show price starting to really gravitate towards this 50-day moving average on the weekly. And if you look at the oscillators and the full stochastics, it continues to point lower as we get that divergence. It's starting to get that that bend in the moving averages. I'm sorry, not the moving averages, but in the oscillators starting to point lower. In the full stochastic, starting to point lower in the wins percentage, and we're getting this bearish to bullish, bullish to bearish crossover in the CCI, where the oscillator is starting to point down as well. So the weekly chart is showing strong sell signals to the downside, which meaning that whatever rallies we see near short term, they're probably going to be short lived, because the weekly charts are starting to take precedence and showing a longer term movement in the opposite direction. And if we look at all the other indices as well, they're all going to show the same thing. Here's the NASDAQ futures on the daily, on the weekly chart. And we see a strong pivot here, right at resistance, right at the 50-day and right at a level of resistance on this trend line that I drew a while ago. See that price action starting to point lower with a strong red candle on last week on the NASDAQ futures. Look at the oscillators and the full stochastics starting to give out sell signals, starting to point lower. Wins percentage starting to point lower. And the CCI starting to get a bullish to bearish reversal crossover in the CCI oscillators. We jump over to S&P minis on the weekly chart. You see the same thing. Again, nothing new. And these oscillators are really starting to accelerate to the downside, even with more certainty. Go straight to the oscillators and the full stochastics. Starting to bend in a big way. Wins percentage, oscillators still pointing downward. CCI just starting to get that bullish bearish reversal to the downside. And again, price action butting its head right up against that 50-day moving average, which more than likely is going to continue to push price action lower. And then the 50-day, once price action is fully below the 50-day on the weekly chart, it will act as a level of resistance. And again, Dow Jones futures shows the same thing. As I pointed out midweek, And look at the strong red candle that we got last week. So we got a strong red weekly candle last week, and I think we're probably going to end up seeing by the end of next week, I think we're going to see a big push below this 50-day moving average for a second red week in a row. So we have to see how that pans out, but I think we could see a second red week in a row with all the indicators pointing to a continued weekly selling pressure. Oscillators are pointing low, downward trend, the oscillators and the wins percentage, and we're just starting to get a huge reversal in the CCI. So folks, again, pay very close attention to what the markets are telling us. In addition to all of this, there's a lot of negativity within world economic news. You all know what's going on over in Ukraine, and don't forget to keep your eye on China and Taiwan. The U.S. has already vowed that they will stand in the gap for Taiwan should there be any conflict between Taiwan and China. And I think that's inevitable. It may happen eventually. So that's some food for thought. Now, I wanted to point out a couple other individual individual stocks and ETFs to show you guys that they're also showing some strong reversal patterns. Look at Tesla, for instance. Tesla had a nice rally off the low back in October, and look what it's doing, running right into that 50-day moving average, and it's looking like resistance, looking just like resistance. Look at the oscillators and the full stochastics, like it's ready to tip, and the wins percentage, like oscillators are ready to tip, and CCI oscillators also ready to tip after a strong stretch of green movement to the upside on the weekly chart. So for multiple weeks, we have seen a move up in Tesla, and I think it's butting its head up to a level of resistance right at the 50-day moving average. So that is another sign that we could start to really see price action start to reverse in a big way. Cathie Wood's ARK Innovations ETF, same scenario. Right back up to the 50-day moving average on a weekly chart. With the full stochastics starting to bend lower, wins percentage starting to bend lower, and CCI. So you get the point. And if we look at a couple more, the IYR, which is the ETF that represents the real estate trust, real estate trust ETF. That ETF starting to really accelerate to the downside on the weekly chart, as you see here in price action, as you see here in all the oscillators, in the full stochastic win percentage and CCI. And let's take a look at one more, which is the darling that everybody loves to trade or loves to invest in. It's Apple. Even though I think Apple is a very, very strong company, it's going to follow the markets eventually. It too is running to a level of resistance, which is represented here. Look at what Apple did when it got up to this level. It's been stuck there. Now it's starting to trend lower. Came up to that 50-day, busted its head above it, but started to make these lower highs on the weekly chart over the past several weeks. And I think eventually we're going to break back below this 50-day moving average. As you can pay attention and look at the oscillators are starting to trend downward, turn downward. And the full stochastic wins percentage and CCI. That is my market review for this week, folks, to show you guys that yes, we're still in this bear market, and yes, these long-term rallies it's always seeming to find itself a way to reverse and fool the bulls into thinking we're in a new bullish market, but we are still in a bearish market. And these long-term rallies always find a way to sell off until we get out of this bear market. From May to about July of 2022, we see what happened there. Right back down, up until level resistance, right back down, level resistance, right back down, up to a level of resistance, and I think we're about to head right back down. So that's where we stand right now, folks. Be careful, be vigilant, and watch for these pivot points. Until the next video, as Tim Davis is signing off. Enjoy the rest of your weekend, and I will catch you guys sometime next week.